Washington Association of Realtors. Lunch and learn on title horror stories. What fun. I'm Bill Fain with Washington Association of Realtors, and I'd like to introduce Jeff St. Sauveur, saying that properly, from Pilgrim Title, who will give our presentation today. And I want to let everyone know that we're going to be recording this for our resource page so that we can all refer to it later. Thank you.
Thank you.
Thank you, Jeff. I appreciate it.
Hi, everyone. As you can see, we're having some technical difficulties. It's okay. I can present without the slideshow. So I did have a good slide that I was excited about. I had this great picture of Marlon Brando from Apocalypse Now. At the end, when he's rubbing his head, the heart. Anyway, that was my lead in. I guess I could tell you a little bit about myself and about Pilgrim Title, and then at the end I'll give you a little more just basic info about our company and our offices and stuff. So I am I'm an owner of Pilgrim Title, and we started in 1998, so we've been at it quite a while, and we have 6 or 7 staff attorneys now, 35 employees altogether, staff of paralegals, title examiners, so full service, nuts to bolts kind of service provider for a lot of work from realtors, which we appreciate, a lot of work from mortgage loan officers. I tend to do a lot of commercial work, commercial real estate development, and I have a partner, Jim Bellavo, who's in Barrington. We have an office in Barrington on Maple Avenue. And we do a lot in the Barrington East Bay area. And our main office is in East Providence. And we do a lot on the east side of Providence. And the last few years, 3 years ago, we opened up an office in Wakefield, right on Main Street. And so we've been doing more and more in Washington County, Kent County, Washington County. Dan Baruti is our attorney that runs the Wakefield office. So Dan is a big fellow, a big personality, great attorney, and he was on his own for many years in Narragansett. He's formerly a police officer, Hopkinton police officer, and so he's been great. He joined us 3 or 4 years ago.
Shut them off.
The Wakefield office.
That's what we have on and on. Thank you.
So most of our work for Washington County, Kent County comes out of Wakefield,
Okay.
and Dan handles that. Brad Douglas is here with me. Oh.
Hey, everybody.
All right.
Wow.
That's a little too dark.
Is that,
Yeah.
I think it's, we have one or the other.
Oh, yeah.
We have one or the, we're lucky in that way, one or the other.
What do you think? The other is better?
I think on, right?
Yeah. I can't see
We
it.
need to see it.
You can still see that. Yeah.
Hi.
Oh. So, can we switch to my favorite slide?
Yeah.
There it is.
And for that one, we should turn it off.
Yeah. Yeah.
All right. I'm gonna just take the pizza box
That was a
over,
hard-
it'll be easier.
Hard to talk to this. Because it does get, because if you've ever had a transaction go sideways, because you do know what a horror it can be. And that is true. So, I will need the lights because I can't actually see my presentation.
So we're in,
Sorry.
there you go.
So, no, just getting back a little bit to Pilgrim Title. We do an awful lot of Block Island. Out there. We tend to get things done with, we're pretty nimble. That can be a little difficult.
the Wakefield office, we're doing more and more every day in this area. So Brad Douglas is here. He's our marketing, business development, also the customer service rep person. So he's the guy you would call if you need to get keys to somebody, or pick up a check, or get a check down to your office from the closing. And it's nice to have that type of person on staff. Brad puts a lot of miles on the car, and he does a little bit of everything. So I would say on closing days, at the end of the month, he's basically running around trying to make sure that your clients are happy and you're happy, because you're getting your commission check and your copy of your settlement statement and everything you need immediately right after the closing. And you don't have to call to try to track down the lawyer that closed the deal, so that's around. I'll go into a little bit more about us after, but right now just jump into presentation. It's funny, I always tell the same story to buyers. They'll ask me, why are we paying for this title insurance policy? I don't get it. It seems so expensive. What's the cover? Now usually, my first response is, well, you're not buying a toaster, right? This is like the biggest investment of your life, typically. And I'll usually give it an example of, I had a conversation about a month ago with a buyer who was insisting about, maybe not buying the owner's title policy. I said, well, you're paying for the lender anyway, so it's not a lot of money on top of that, so you're gonna have to pay for the lender's title insurance. And we were going through the cost of it, and I said, he was buying a house in Johnston for like $500,000. And I said, well, let me ask you, when did the last time you got your a flat screen TV? Oh yeah, Best Buy, go to flat screen, got a flat screen TV, it was like $697 for the flat screen. Sure enough, I asked him, he had gone up to the cashier. Cashier said, would you like a 4-year warranty on that? Only $97. Yeah, sure, $97, less than $100, seems cheap, right? So, you run the math, and I'm telling you, so you just paid 14.28% for a limited 4-year warranty on your flat screen. I said, the title insurance, even though you're not buying it, if you're just paying for the owner's title policy, it's 0.35%, right, of the purchase price. So when you think about what you pay for and how much it costs for one-time insurance premium to cover your acquisition, insure your acquisition, and your investment, and it's a one-time premium forever. So even after you sell the property, anything ever came back to you, you still have your title insurance. That's one of the things that I try to explain to people. It's not expensive. It seems like every closing cost seems so expensive to everyone, right? So, try to. In the end, I would say you're about 1%, right? Closing costs equal about 1% of the total transaction, and as a buyer, and you put it in perspective. And we also have a lot of material that we have handy, which we can share with you. It's actually, much of it is in your folder. So what we do is we have that in digital format, and it's an FAQ, it's explanation of what owner's title covers, why you should have it, the 10 reasons why you need title insurance, things like that. But what it does for us is it saves us a lot of time, because we don't have to have the conversations. Oh, we got some great material, here you go, email it to you, you can go through it. If you have any questions, you call. Typically we don't get a call back, right? But it's good for the realtors who get that question, right, from their buyers. And instead of you trying to refer your buyer to call us, and et cetera, you can just zip off the material, say, hey, I got some good material, just read through it. So that's something that if you wanted to put on your desktop, Brad can set you up and send you the materials. So, but it's all in your folder. So, So getting back to the cost, there's a lot of times I get the call that, they don't want the owner's title coverage. And, I always advise them, again, you gotta get it for the lender typically anyway, right? So, it's usually $2.50 per thousand for the loan amount, and then you're talking another $1 per thousand on top for the owner's policy. So in the scheme of things, it's very inexpensive in that sense. But I do get also, the title companies never pay claims. Right? I don't know if you've ever heard that before, but there are articles out there. Title companies never pay. They don't have claims because if you do it right, you don't have a claim. So, but what's misleading about that is that the amount of money that the title companies pay out to compensate someone for a title claim is relatively small, but what they don't capture in the amount that gets covered is the work that goes into curing things, right? So we're curing things all the time prior to closing. A lot of times the buyers won't know, the realtors don't know, the lender doesn't know, but we see nicks and dings on the title all the time, and we have to get the confirmatory deed or a new memo of trust, or there's an old discharge of mortgage. Obviously, we got to track down, and the thing is if the seller has that title problem and we can't solve it quickly, they can call because if they have the owner's title policy, they can call, they can send it to us, we can submit it to the title company, we can say, can you insure over this for the new buyer because you already insured the seller. So there's a lot of practical reasons to have that owner's title policy. It cures a lot without the insurance company necessarily writing a check to somebody. So I do sometimes, I'll reach out to a seller and I'll say, look, you closed on this house 4 years ago, but you got 3 mortgages from the previous owner that are outstanding, never discharged, and she'll say, oh my gosh, I got an owner's title policy. Well, how could that happen? I said, well, it should have been tracked down at the time. And then we'll end up getting a copy of her title policy, and we'll submit it to the title company, and we'll work it out with the buyer, with the title company to insure over it, and then we'll track it down after, or we'll have the title company track down the discharges later. So a lot of times you won't hear about it. You got enough to worry about, enough to think about in terms of trying to close the deal, and that's what goes on sort of behind the scenes, right? So we're constantly negotiating coverages on title defects, and a lot of the defects are just that, right? They're defects. They don't necessarily mean, it doesn't necessarily mean that there's a failure of title. It's just the things that we have to clean up. So just in terms of the benefits of having an owner's policy as a seller, and then being able to afford to provide the coverage to the next buyer based on that title policy is huge. I'd say once a day we deal with that. I got one last night. It's a big commercial transaction, and there are 2 mortgages that were never discharged from the prior owner back in the 90s, given to some U.S. Capital Bank that doesn't even exist anymore. So we had reported it, and then the seller's attorney came back and said, hey, I've got this title policy from Chicago Title, and they should have taken care of that. I said, yeah, that's true. So instead of delaying the closing, we're now able to go to Chicago with that seller's title policy and say, hey, we got some problems. We got some old mortgages that are not discharged. Can we issue a clean policy for the new buyer, and then you promise and indemnify and undertake to get the discharges post-closing, and that's what's going to happen. Right? So again, you don't see that in the loss ratio of the title company, right? Because they didn't write a check, but they have to step up. They have to cover it. They have to cure it. They have to fix it. They have to spend time, and they've got this whole claims department with hundreds of people that just do this across the nation all the time, right? So.
Is it a flat fee? Excuse me.
Yeah.
Or is it, does it matter how much man hours go into?
Yeah, no, so owners and lenders title insurance is based upon the amount, right? So the purchase price,
Yeah, I
Sure.
know, I heard you say
Yeah.
that, but I
Yeah.
don't know if there was more to it than just that.
no, right? So a lot of times I spend time dealing with this stuff, right? And it's not so often that I can charge for it, right? So like in this case that I'm explaining, you know, we found these old mortgages on discharge. I got to spend time. I got to get the title policy. I got to submit it to the title underwriter. We got to get authorization to insure the new buyer without an exception for that. That all goes on behind the scenes without really anyone paying for it, right? So that's why when you look at like the loss ratio for title underwriters nationally, it's like 5%, which is much less than say property casualty insurance. But it doesn't take into account the time overhead dedicated to curing title problems without writing a check. So just trying to give you a little, before we jump into some horror stories, just trying to give you a sense of how we can, how title insurance can take care of a lot of problems prior to closing.
So Jeff, that
Yeah.
example
Yeah.
from your
Yeah.
horror story from
Yeah.
yesterday, so you received indemnification from
Yeah.
Chicago Title,
Right.
but typically, how long does it take to correct the title?
It depends, right? So
Yeah,
if
it
I see a
depends.
mortgage outstanding from Bank of America, we'll get a discharge in a few weeks. If I see something that, what's a good one?
Old Stone Bank.
Yeah, okay, Old Stone Bank, there you go.
I had
Oh,
Jen.
No,
I
it's
had
great.
one.
Absolutely, right? So Old Stone Bank's been out of business forever, right? So, and Depco took over its assets, but a lot of the assets were actually assigned before Depco. So it's hard to track down. We have we have a book of institutional history. So like we'll look for Old Stone and we'll see, assets to Depco, mortgages assigned to Shawmut. Shawmut became Citizens. Some of Shawmut's assets were assigned to Bank Rhode Island. So, yeah, and that can take a while. Now, the General Assembly a couple of years ago, in their wisdom, reduced the ancient mortgage statute from 50 years to 35, which is good, right? So it cures these old mortgages. So at this point, you probably won't see any more Old Stone mortgages holding up at closing because they've expired by statute. It used to be 50 years, now it's 35. So, yeah. So like a good title attorney will know how to apply different title standards to cure title problems that appear on the record, right? So, for instance, you have a mortgage that says that matures in 2017. After 5 years after that maturity date, it's discharged by law, right? So those little, it has to meet certain criteria. It has to be an institutional mortgage, can't be a private mortgage, things like that, which statutorily and by title standards, we can knock out a lot of these things now. So, but I would say undischarged mortgages probably the biggest problem, right? And then they created MERS. I don't know if you ever heard, Mortgage Electronic Registration System. They created that years ago, supposed to take care of everything, but then MERS went out of business. So it's always a problem, especially after we have a banking crisis. A lot of institutions fail, and you got to know who to go to after. It's Depco or the FDIC, or So to your question, it can take a while. So I do have situations, right, where an investor might be coming in to do a flip, right? So yeah, maybe I could insure over that old mortgage for the owner, but I need to advise him or her to say, look, if you flip this in like 3 months, the next buyer is going to find that, and you're insured, which is great, but still a claim, right? You're buying a claim. And So that is a consideration for us.
To explain that,
Yeah, yeah.
guess you have to.
Well, absolutely, right, because there's a difference between insurable title and marketable title, right? So marketable title is when you convey and transfer by deed and the title's perfect on its face. Insurable title insures marketable title, but it also could insure title that has a couple nicks and dings on it, right? So like an undischarged mortgage or something like that. So, so we do have to explain that to buyers because we do, you know, we represent the buyers. We have to advise them that, hey, you know, there's some risk in this, you know, because if you turn around and try to sell this thing in 2 months and the title company hasn't gotten that discharge, that could be a problem. That could hold up your closing. So, yeah, we have to explain that to them. But again, the goal is to get the deal closed, right? So, whatever options we can at least offer is what we that's our goal, right? So, we don't, as a title company, we don't have any interest in trying to hold up a closing, right? Because of title problems, we're there to cure them and make sure the transaction closes on time. So I will jump into a few stories. I'm sure you have your own, and we'll do a little Q&A after. But I had a transaction 2 months ago, and it was a disaster. It closed on time, and it was a disaster, right? So it was a transaction in April. It was in Woonsocket, and an individual owned a 2-family duplex, side-by-side townhouse, and he decided to declare it as a condo, right? So declared 2 units, and that declarant, that seller had a realtor, had an attorney, and the buyer of the first unit was using another attorney, and the buyer of the second unit was our person, our couple, young couple buying their first house, and first-time home buyers, and everything went swimmingly up to the day of the closing. What happened was we had reviewed all the condo documents prior to the closing date. They looked good. The attorney that did the documents did a nice job. And then the seller prepared the deed, and we saw it, and because we had asked for both deeds right before the closing. We saw it, and the first one, well, both deeds didn't have the Exhibit A description on it. So, all right, because the buyer's attorney, the title attorney will typically put the description on, right? But it's a condo unit, but it hasn't, the declaration hasn't been recorded. So, you know, you'd have to like put unit 1, but declared by declaration, recorded on book blank, page blank, and make sure you gotta be careful. So, the first closing happened in the morning at 10. Ours was at 1, and we did our closing, had financing. The first unit had financing. Well, sure enough, we update the title after our closing. We go online, it's in Woonsocket, everything's online, see a picture of it, and the declaration went on fine. The first deed for that first unit contained the entire land description of the land that was declared, right? So what happened? That seller on that deed sold everything. Didn't have anything else to give, right? Our deed was no good, right? We had put our description on unit 2, you know, we were gonna fill in and we had to put the brakes on everything. And we had to call the seller's counsel and say, look, you know, I know you gave the deed, you relied upon the buyer's attorney to put the description on. They slapped on the land description, right? So the whole parcel, right, was sold.
Wow.
Yeah, both units. So, yeah, we had to call our buyer and say, because they had left the office, you know, and when we have a problem, then we had to call the lender, and I think the lender might have been Washington Trust, as I recall. Anyway, so we called the seller's attorney, and he's, fit to be tied. But then we called the buyer's attorney, right, on the first unit. And he said, look, you gotta fix this. And, well, they had already mortgaged the whole thing, because they used the same land description on the mortgage, right? So not only was it sold, but, I think it was like Bank of America had a mortgage on the whole property. So we had to unwind our transaction. We had to send all the docs back to the Washington Trust. We had to send the money back. It took almost a month before it could be fixed. And it just goes to, it was a true horror story, right? These poor people,
They couldn't move in.
they got in like about a week and a half later, after the seller felt comfortable it was gonna get fixed. Because you had to have a cooperation of a lot of people, but what we had to do was get a partial release from Bank of America, right? They had to partially release Unit 2, so that the buyer of Unit 1 had to transfer title to Unit 2 to our buyer. It was a mess.
Jeff, in this scenario,
Yeah.
so when he created a multifamily into 2 condos.
Yeah.
So he had to have an attorney
Mm-hmm.
and a title had to create 2 separate units, and the land should have been, all of that should have been.
Mm-hmm. Yes.
So was it just completely not seen?
Yeah, well, again, it was simply the buyer's attorney on the first unit slapped the wrong description on the deed. That's it, right? Because if they'd taken the time to say, oh, Unit 1 declared by that declaration, recorded today simultaneously, whatever, it would have been okay. But they put the whole,
So it was a
Put the whole
previous
shebang.
land description.
yeah, well, it was, the current one,
Current one, but it wasn't
but it was the
designated,
whole
the whole thing.
enchilada, right?
Yeah,
And then you put the declaration on that land and you create 2 units.
yeah,
So when you sell all the real estate, it's,
yeah,
everything goes, whether you say condo or not.
yeah.
Yeah. And part of the problem is too, it's a brand new condo, and I always try to get the seller or the declarant of the condo to just record the declaration a day or 2 before, so that we can look at it, review it, make sure it's right, and then we can do the descriptions, and then, but this all had to happen the same day, yeah. So.
So as an agent, how can we avoid something like this from happening?
I would say, make sure you refer your buyers to somebody good, right?
Okay.
I don't know, but I will say that the attorneys involved, they're good, seasoned lawyers that do, a decent job, most of the time, yeah. So, but no, I don't know, in that case, I don't know if there's anything an agent could have done.
Okay.
Yeah. It was, now I will say that if we had missed it, if we hadn't updated the title, and we had just put, Unit 2 and gone on, and, then we would have issued an owner's policy. And then someday, somebody would have caught it, and we would have been on the hook, and the title policy would have kicked in on coverage. And, that would have been critical, right, for the buyer. Because they would have a deep pocket to go to with the title policy, with a national title underwriter. Luckily, we, caught it before. And that's, yeah, and that just happened, so it happens a lot. Like, you don't realize, I deal with the title issues all the time. And most people in the transaction aren't generally aware of it, so. And I've got, certainly have a few more too. I had one, it was a subdivision in Foxborough. It was probably 3 years ago. And it went down, it was like land, there were parcel numbers, right? So the subdivision goes down, it's parcel 1 through 22. And so it was all new construction, like turnkey stuff. So as soon as the CO issued, buyer comes in and buys. Well, they had amended the plat, and and the realtor was involved, because when the realtor filled out the P&S, they referenced the old plat, and the numbers had changed. So we were not involved on the buy side at that transaction, but we were when they went to refinance. Well, don't you know, this buyer owned like lot 22 on the plat in the deed, but really they were living in a house that was on lot 24. So they didn't own their house at all. And the people on 24 thought they owned 24, right? Because it got sold twice. So our borrower, you know, lived on lot 22, you know, beautiful brand new house, but they owned lot 24. And then the people in lot 24 didn't own lot 24 because our guys had already took title to lot 24.
How does that happen? Like, when it's recorded, don't they see, okay, this has already been accounted for or something? I don't know.
When did the purchase and sales didn't match the appraisal? I mean,
Yeah.
it should have been.
Well, what happened was, right, there's a difference between the recorded lot on the subdivision and the 911 address that the town applies. So the address matched up to the house the person lived in, but that house wasn't located on lot 22. So, like for instance, one thing we do is, on a purchase and sale, we always have the buyer and the seller, to the extent now that we have closings, but certainly the buyer will initial the lot on the plat map. So 99 out of 100 times it's fine, you know. Every once in a while, and I had one the other day, a guy was buying a vacant lot next to his house, and it took him a while to like get his bearings to figure out if like, you know, so I was like, because this is your lot. And he's like, no, that's not my lot. He said, that's not what I'm buying. And, you know, it was a matter of like him looking at the map and figuring out north, south and everything, but it took like a while, and I had to bring in another map, and finally he's like, yeah, okay, I get it now, the street comes this way, and so, but, you know, at first I was like, okay, well, hopefully we searched the right lot, right, based on the information that was given, but those are the kind of things that try to do to prevent some of these disasters, you know. And then I had condos are, new condos are really treacherous. A lot of practitioners in Rhode Island just generate canned documents from some other condo project, and there's a lot of sloppy work out there, especially on the smaller projects. So be careful there. I see it all the time. Powers of attorney, another area that's like treacherous, right, for us anyway. We're seeing a lot more power of attorney because people aren't showing up for closings. People will like, I need to close the end of the month, and then we're like 2 days from the closing, and they're like, well, you know, I'm gonna be out of state. Right? Like, what are you buying a $750,000 home? You didn't think you had to show up? I mean, it's gotten really, I don't know if you guys see it, but I scratch my head. You know, people show up, like, you know, they don't have their ID on them. You know, it's become, it's a little sad because over the years I've just seen like the lackadaisical attitude of people buying a house for like, you know, $1 million, and they're like, well, I can be there, but my wife can't. You know? I'm like, well, no, you know. And they're like, oh, can't you just do a power of attorney? You know, I said, well, you have to sign the power of attorney, so why not just sign everything at once? You know. Anyway, powers of attorney are treacherous for us, right? Because sometimes they show up, oh, I have power of attorney for my mom or my wife or my husband or my father, whatever. And, it's 14 years old, it's a copy, So, well, we need the original. Like asking for an original, that's like how could you, So we have to be really careful with powers of attorneys. So, and I think, generally speaking, you ought to be too. I think if you have a P&S that's being signed by two sellers and one is saying, well, I got power of attorney, make sure you check, make sure you're diligent about it. And, it's not fatal, but, you don't want to get down the line and figure out that someone signed something that, wasn't authorized. A lot of times, I've had others too. Oh, I've got power of attorney for my dad, so I'll sign on behalf, and then I'll say, well, where's your dad live? He goes, oh no, he passed away years ago. I said, well, no, the power of attorney's no good, right? I mean, yeah. So, and so you gotta be careful. We've had husband and wife, purportedly husband and wife, show up for closings, and we've had 3, I think, over the last 15 or so years, and one of the spouses is not actually the spouse. Right?
I had
Someone,
that once.
someone posing as a
Like they were not married, or
It
was
was a
girlfriend. Yeah, we've had 3 where the girlfriends have showed up. It just happens that way. I don't know. It just happened that way, but
Pretending to be the spouse?
pretending to be
Or
the
a
spouse.
spouse?
Pretending to be the spouse. Signing on like a cash out refinance, right?
But isn't that why they started making everybody show IDs? Because years ago that happened to me back in the 80s.
Yeah.
And there was a lawyer who brought the girlfriend, sell the property, and the wife had no idea.
It was a lawyer selling?
Unbelievable.
Oh, jeez.
I'm not gonna mention the name.
No. I don't wanna know.
Yeah.
Wow. Yeah,
That's what
so
they started saying, they're gonna show
this is
IDs
the
now.
stuff, it goes on all the time, And you don't think about it, right? Because in your career or whatever, you might have, like you've had one, so, but you may not have ever had anything like that. But just based on the volume of closings we do, over the years, so we've had three girlfriends show up as wives. All 3 times we caught them because we were insistent about photo ID, and we're looking at it, and she goes out to the car, she comes back with a credit card, and it's like, that doesn't seem right. We need a photo ID, and then goes back to the car, never see her again. Just, so.
It's criminal, yeah.
Yeah, it is. It's credit fraud, it's criminal, So,
But if I list a property and someone tells me they have the power of attorney, I ask for a copy, then I give it
Yes.
to an attorney to review it, so
Correct.
it's gonna be okay,
that's right.
you know?
Yeah, right. Like
Doesn't it have to be a certain type of power of attorney?
well, see, so that's the thing, right? It's supposed to be special power of attorney, right? Specific, right, to the property that, and we'll do a specific special power of attorney, like if one spouse says, hey, closing in a few weeks, can you do a power of attorney because I'll be traveling or the spouse will be traveling, and so, okay, so we'll do it for that transaction, right? So they have to sign, notarize, send us the original, and then we have to record it. So, and that's okay, but it's the surprises that really, get the red flag up, right? Because it's like everything's swimmingly, moving along, and then all of a sudden, so-and-so's not gonna be here, but they have this power of attorney, like a general power of attorney copy, 10 years old, and so. But there's some there's some horror stories out there with power of attorney. Fraud is pretty, like think about how easy it would be, right, to just forge a power of attorney.
Has to be notarized though, doesn't it?
It has to be notarized, yeah, but
Then if you're an attorney and you have 3 girlfriends, then maybe that's okay, but everybody's.
I think it was 3 different situations.
Yeah, no,
Yeah.
That would be, you asked 3 girlfriends anyway, so.
well, they actually showed up, so that's even worse, to sign as the spouse, but yeah.
I'm hearing a lot, on the radio or TV about getting insurance because your house could be sold
Yeah.
without
Title.
you knowing it. Like all of a
Yeah.
sudden you realize you don't own your house. They take it, they somehow able to
Yeah.
refinance your house. And now you're on the hook of,
Yeah.
you have no idea that this happened. And there's like the ad saying, you know,
Right. Title lock, I think it's called.
so, yeah.
We looked into that product a few years back, and I think statistically speaking, well, I've never seen that happen.
Yeah.
You know,
It sounds
know.
scary, but
yeah,
reality, it doesn't.
yeah. It never seen it happen.
Yeah.
I think the title lock is, I don't know. I wouldn't get it for myself. But think about it. If somebody wants to take your house and then forge your name on a deed and sell it to themselves, what do they get? They get a tax bill because they're not in possession of the house, right? So, I haven't seen that happen.
Okay.
Yeah, and it might be more prevalent in other parts of the country, with different recording systems. And, but yeah, in any event, we see a lot of defective land descriptions. We see a lot of missing heirs, right? So if you are going to list a property and the seller, your client says, "Oh, this house has been in the family for 110 years," that's when you're like, "Oh boy, okay, let's look at that," right? So, because I will say that most title problems I get hired to fix are exactly that, right? Someone who has, owned the property and inherited the property somehow, or took possession of the property, and they never, probated anyone's will. They never, someone died without a will, but they think, the spouse got it, but under Rhode Island law, right? So, if a spouse dies without a will, the real estate goes to the surviving spouse for life. But the kids get the remainder, right? So when the spouse passes away, the kids take title. So a lot of people don't, realize, and it is a little strange. But I've seen the surviving spouse try to deed the property to, say, one of 3 of the kids, and all the kids are fine with it because they think mom owned it, and one of the kids is going to take the property, the other kids don't want it. Well, the only thing that kid got was a life estate, and the other kids still own the real estate, right? So we see that a lot, and whenever I get a call from someone that says, "Yeah, well, don't worry, we've owned this property forever, and we're just gonna, we want to declare a condo or whatever," I say, "Well, we got to look hard at it," and typically there's a lot of cleanup to do. So, and there's ways of doing it. Sometimes you gotta get deep. But I've done, whole family trees that go on for generations to try to figure out who's who and who's alive and how many kids did they have, right? And who got what. And, so that happens. What else? Let's see. What do we got here? Oh, that's me. Yeah, so that's kind of what my practice is about. So I tend to do more commercial stuff, but we do a volume of residential, obviously. Next one. Oh yeah, so this was my quote because I feel like I'm always staring into the abyss, right? It's like I said, we end up doing a lot of title curative work for no compensation, right? Because that's it. It's kind of the cost of doing business, and we try not to bother people, right? Because you don't want to hear about right after the P&S is signed. Oh, there's this discharge of mortgage that your seller, you don't want to hear about that. So we work on it, and that's true for the conveyancing bar in general. It's gotten a little bit better in the recorder of deeds in terms of, I think because of the curative statutes and things like that that make things go away over time.
So Jeff, there's been a lot of cash purchases.
Yeah.
So with that, obviously,
Yeah.
you know, you have to sell the buyer. You
Yeah.
need to purchase title insurance.
Right.
Do you run across where some just say,
I gotta say, I would say 99.5% of buyers get owner's. I can't remember last time someone rejected it. I think everyone begrudgingly knows that they gotta get it and pay for it. You know, when I do get the questions, you know, about cost and things, I'll give them the example of the Best Buy 4-year warranty, which covers nothing for 14% of the purchase price. You know, yeah, usually works. You know, and then I'll send them some of the information. So I'll send you some info. But somebody always digs up an article from like the Wall Street Journal from 15 years ago about why title insurance is a fraud and a scam. And, you know, so.
okay,
But I can't remember the last time at this point. And I do some big transactions, so we'll do, you know, every big transaction.
yeah,
Title insurance, like, it gets expensive when you're talking about $40 million, $50 million transaction, but it's a given, you know. So we just did a 300. Bye, Bill. Thank you.
I apologize.
That's okay. Yeah. Anyway, we did one apartment complex in Middletown, $45 million last 2 weeks ago. It was a nice deal for us. Title insurance was great, but you know, not even a blink. I mean, it's just a given. You know, it's like doing an environmental
yeah.
assessment on a commercial property. You don't buy anything without it. You know. So it's not that difficult a sell, so to speak. But if it takes up your time in trying to explain, because in my example, I will have buyers that they'll pick up the phone. The first person they'll call is the realtor, their realtor, buyer's realtor, and say, "Oh, I can't believe the charges on this settlement statement or whatever." And then they'll call the mortgage loan officer and say the same thing, you know. And then both you guys will call me, you know. And we all spend a lot of time trying to educate the buyer, so that's why we put these materials together. I typically say, "Hey, I got some great stuff. I'll zip it off to you by email. Read it, you know," and usually does the trick. So, yeah.
I tell them it's gonna protect them against an Indian if an Indian comes back and says they claim the land. And they're like, okay.
Yeah. Okay.
That's what I'm saying, yeah.
Yeah.
'Cause
We
you
had
never
one.
know.
We had one a couple years ago in
Yeah.
Charlestown, like near Matunic. Yeah, they were doing some excavating and they found
Well,
something.
New England has more
found
probably
something.
issues than perhaps maybe
Yeah.
California or
Right.
some of your,
Yeah.
uh.
Yeah, like
west-
Texas is, you know, it's like everything's a quadrant, you know.
Yeah.
So I think Iowa there is no title insurance. Yeah.
Oh, really?
Yeah. So yeah, there's different states regulated differently, for sure. What else we have? Oh, yeah. So these are some of the things that, you know, we deal with all the time. You know, IRS tax liens. You know, easements and encroachments. You know, that I should say something because the other thing I tell a buyer is, you know, I always ask them, "Are you getting a survey?" I'm like, "What?" So, "Are you getting a survey?" "No." "Should I?" "Yes, you should. It takes a long time and it's expensive." "Yes, it is, but you know, I gotta advise you because you should, right?" We see survey problems all the time, and sometimes they're not covered by title insurance. Could be something on the ground, could be an easement, cart path. We're starting to see like a resurgence of seaweed easements, right? Right away to cross your land, get to the water to gather seaweed. Well, all of a sudden, seaweed in Rhode Island and shore access is becoming a big thing. And start to see people basically express the fact that they have the right to go over your property to get to the water. We see a lot of that in Little Compton. So, Westerly, not so sure. Little Compton for sure. Tiverton.
Just things like that, survey, if they find a cart path going through the property, they'll, survey will show, but, we don't get to we don't get to go visit every property, obviously, so, sometimes we don't know. We had an easement on the old Tiverton power plant that was built, several years ago. It got held up for 2 years because of a cart path easement, and, took a long time to resolve that with the neighbors, and the power company had to pay a lot of money to get rid of it. I always tell buyers, just I feel, and they never do, right? So they never listen to me, and they don't pay for a survey. So in Massachusetts, they get plot plans pretty regularly because the bank requires them, and it's a very low level survey. But sometimes they'll pick up like the fences, neighbors' fences on your land, or shared driveways. Big issue, right? Those are the kind of things. And then you get the total failure title, which is exactly what I talked about with the condo. Just a total failure title. You never got what you paid for. Or the same thing with the subdivision lot fiasco. So, anyway, next, Ellen. Oh, yep. So those are offices. So we cover all of Rhode Island. We cover Massachusetts. We're all over Mass. And I think all the attorneys in my office are Massachusetts attorneys as well as Rhode Island. And then cover Connecticut. We have an office in Florida.
Yeah, we don't have.
Oh, yeah. We have our transaction in Florida. We cover the whole state. We have an office right outside of Orlando. That's been fun. And it's funny how often we'll get a realtor to ask us to help on something, usually for a family member or a good client who was a buyer here and buying a condo or something down in Florida, and they don't know anyone down there. And Washington Trust will do mortgages down there for buyers, like Snowbird, buying down there. So it's been good for us in that sense. We try to let people know that if you have a Rhode Island or buying in Florida, we can help. So, and then
That's really good to know, actually.
yeah, it's been. I would say there was a time where like every month I was getting a Florida inquiry, and where our office was, and then finally, and we kept referring to people down there who we knew were good. And then finally we were like, we should just open an office down there. So so it worked out well. Have you guys had any stories crop up? Have you had any closings get derailed because of title issues recently? No.
My coworker did.
Yeah.
It's still ongoing 2.5 years later.
Oh, that's a horror story.
Uh-huh.
Wow.
Yeah, the father had passed away, the 3 grown sons were still around. The mom owned the property, and she's actually a neighbor of mine. She got too elderly to come back and forth from Connecticut anymore. One of the sons passed away, and during the probate or whatever they were going through, the wife signed for him.
Oh.
And and so the closing blew up because they found that in the last minute, and they leased back to them for the last couple years.
Oh, wow.
They just finally let them renew it again. The ex-wife won't, or the widower, she won't sign.
Wow.
The mother doesn't have, enough money to go and sort it out legally.
Right.
So it's
Wow.
a disaster.
It is.
Yeah, and it's all took place out by Hartford where all that happened. So
Yeah. No, but that's kind of to my point about it's been in the family. Don't worry about it.
exactly,
And-
that's what I was thinking.
Yeah. We do. We see that a
Total
lot.
mess.
Yep.
I don't know how she can get away with not
Right.
sorting that out by now. I just don't. I don't even get it. But
Yeah. Sometimes you just got to go to court.
Exactly.
You know, you
Yeah.
really do, you know,
Right.
and I've seen people tell me like, you know, this one, you gotta go to court, spend the money, get it fixed, you know, a seller, for instance. And, well, if we track down the heirs of so-and-so and we get them to sign off, and then it goes on for a year, and you're like, well, if you had gone to court, it'd be done in 8 weeks, you know, but.
I think the buyers took them to court to get them to renew the lease again, because it was originally like a
Yeah.
2-year lease or something, and
Uh-huh.
they got that,
Yeah.
because they know they just renewed it again this year, but,
Yeah.
yeah, I can't understand how it could drag on forever like that.
Mhm.
Something's gotta give.
Mm-hmm. Yeah, it's been a funny market, right? Because everything's just flying, right? There's low inventory. Buyers aren't poking at things very much, and so I think we've had a decent run. But you know, back in I guess 07, right? Was 08. You know, after everything crashed and all those foreclosures, you know, we were seeing just a real mess with foreclosures. We just haven't had them, right? So I don't know. I can't remember the last time I saw like a real foreclosure property being purchased.
On the power of attorney for, say, a single transaction for the closing, is that, so what happens if that's usually, like, say, I have clients in Texas, they're not gonna be coming for their closing when that happens.
Mm-hmm.
They know that ahead of time, they're gonna plan that out
Right.
ahead of time,
That's right.
whatever. Is it just specifically for that day, or that transaction, if it, say, got postponed for some reason?
Right.
Is it
No.
still viable? It's not set by
Yeah,
the,
we don't let them
You know,
expire.
yeah, they
You know,
just,
it's for
as
the.
long as it's for
It's
that,
specific to the address of the property,
Mhm.
selling at a certain gross sales price.
right. I mean, I've run into a lot of the power of attorneys with, you know,
Yeah.
elderly people going into nursing homes, and now,
right,
you know, their
Right.
kids or whoever are the signers.
right, and that's you gotta be kind of careful about that. And
Yeah.
when we do a power of attorney for a closing, for a seller, we always send the deed, right? Because if they can sign the power of attorney, they can sign the deed and the power of attorney, right? So we always get the original deed back with the power of attorney. So everything else can get signed up under power of attorney, but at least we have the signed deed by both spouses, for instance. Yeah. Yeah, but the old power, I just got one in 2002 general power of attorney. Just said it's not gonna work. I said, well, my mom's in the nursing home. Well, okay. Does she have her wits about her? She's not under guardianship. She's lucid. And yeah, okay. Well, they wrote notary services all over, right? So we can find a notary service anywhere and have the person go right to the nursing home and have it signed up and notarized. So, which is very common in Florida. Notary services all over the place. Yeah, yeah. Older population. Yeah, assisted living. So, yeah. All right. Well, I don't want to keep you long. It's 1:15, so I know that. But if anyone has any questions, yeah. please. My card's in the folder, and Brad's is also. Feel free to reach out to Brad too for the title insurance material, digital form. It's helpful. Save you some time. Plus, you don't really want to be answering questions about title insurance and what they cover, and
This is very good information. Do you provide this to buyers? I mean, at what point do they get this kind of information? Because you wouldn't like the realtor to provide this
Oh, you
to their buyers,
don't want?
No, you do.
Oh yeah.
Yeah, you do.
Yeah.
So,
Yeah, that's why we encourage you to
yes. it's
put it on your
very-
desktop
Yeah.
and just email it and attach it and send it.
Yeah.
And when they open it up, it's in digital color format
That's
and
very good information.
it's readable. Yeah. No, like I said, for me, it saves me a lot of time.
Especially for first-time home buyers, it's
Yeah.
first time around.
Yeah. And when they're working with a loan officer, the loan officer might tell them like, owner's title is purely elective. It's not-
Yeah.
And then they
Sometimes
go, oh,
do that.
Yeah, they do, because,
Because they try to, your costs are gonna be reduced.
right, well, that's not part of our cost, right?
Yeah.
Right.
Exactly.
So that's why the buyers will call us and say, hey, do I have to get this? And,
But you can suggest it though. When it's in their for us.
oh,
for
yeah.
agents,
it is,
that's
right?
the
It's,
best- Yeah.
it is in their best
I
interest.
generally am too.
Yeah. And if they ask, detailed questions, like I said, you can zip that off and say, oh, here's some information about owner's policy and what it covers and things like that. It's just, like I said, it saves you
It's
time.
an expense, everybody is so
Yeah.
short-sighted when it comes to, the money end of it, but
Right.
then in the long run, it
Right.
could really save a lot of
Yeah,
everything.
yeah. You wouldn't buy a new car and not have it
Well,
insured, would you? Yeah. Like if you bought a car cash, I guess you still gotta get insured.
yeah.
I don't think you think twice about it. But that's why I try to tell people about the fact that the cost is really not substantial in the scheme of things.